All right, do not purchase a condo until you have at least watched this video. A lot of people oftentimes get excited about the idea of low maintenance on the property. That's kind of one of the biggest concerns that I hear from folks when you think about home ownership. They don't want to be responsible that when something goes wrong, they have to take care of it. And most condos associations will take care of the exterior items. So you need landscaping that's on a regular schedule, snow removal, they take care of that too, and even larger ticket items such as needing a new roof, they plan and budget for it, sometimes building a reserve, charging you a little bit extra with a planned renovation project down the line. There's a downside to working with HOA as well, and sometimes you cannot control who exactly your neighbor is or what's exactly happening in your neighbor's unit. So recently had a tenant who is living in a condo, and there was a backup that into her unit that was causing the toilets in her unit on the first floor to overflow. We had to call out maintenance folks to come out, and when the plumber came out to take a look at things and they put a camera down there, come to find out they could see that baby wipes and diapers was the cause of the backup. Through further investigation, they also determined that those baby wipes and diapers were actually not coming from our tenant's unit. It was actually leading directly to the doorstep of the tenant that's on the other side. So in this example, we had to call the HOA in order to get reimbursed because essentially they should be billing the tenant next door. When you have shared lines and systems, you can run into situations such as this, where if that tenant is not maintaining the property properly, it can cause problems for you. HOAs charge, in most cases, a monthly HOA fee, sometimes very small, sometimes it can be a substantial amount. It often varies. It just depends on the level of service that they provide to you as the owner. Some are more full scale, some not so much. And so that is part of what you have to budget for when you think about your monthly payment. As a mortgage loan officer, we're going to look at what your monthly housing expense is going to be with your principals and interest, taxes, and insurance, and in this case, the homeowners association fee, and making sure that there's affordability there for you. The other thing that you want to consider is HOAs or condo associations have to be on an approved list if you plan on using FHA financing or VA financing to borrow for money for the house. In many cases, the HOAs have not been established. Now, this may vary from city to city, state to state, but in Ohio, specifically Cuyahoga County, there's not a lot of HOAs that have been approved. You also want to make sure that when the real estate agent puts the listing on the market and they call it a condo or a townhouse, it is exactly what it's supposed to be. And you could check that by going to the county auditor site to see what is that parcel number actually listed at. Is it truly listed as a condo or is it a townhouse? If it is a townhouse, regular financing applies. If it is a condo, we want to make sure that it is on the approved list and available for FHA and VA financing. If you're someone who has VA eligibility, this is something to consider. If you want to purchase a condo, you may not be able to use your VA entitlement in order to purchase that condo. Recently had a situation with a gentleman who felt like, I went through a lot being in the service and I want to reap the benefits of that time spent by utilizing my VA eligibility. He also wanted a condo just because he wanted to limit the work that was necessary or the maintenance responsibility that comes with home ownership. And so in his situation, he had to make a decision. Was it more important to use the VA eligibility or for you to handle the maintenance on your own. The thing about it is, what I explained to him, if you decide that you want to use the VA eligibility, then you just hire and pay for a landscaper, snow removal, and plan and budget for things like a roof replacement, any other large improvements that's needed for the property. Either way, you're paying for it. Either you're paying for it in the monthly HOA fee, or you're setting money aside to take care of these expenses on a regular basis on your own. So if the property is not on the list of approved financing type, then we're going to look at conventional financing for the property. Conventional financing is pretty much, or paying cash, are the options that you have in order to purchase that condo. It's still not a slam dunk at that point, even with conventional financing. Once you go under contract on that property and the contract goes over to the bank or the mortgage loan officer, they're going to start processing and doing a condo doc questionnaire. So as part of that questionnaire, the HOA contact information is needed, and we have to verify the financial stability of that HOA. In many cases, I've seen where a HOA is kind of underfunded, meaning if a roof is 10 years before needing to be replaced, do you have enough money in your reserve so when that 10-year mark hits, you're able to replace the roof? If the answer is no, and there's not enough money in that reserve, the lender may decide to either deny or require that you as the borrower make a larger down payment for the purchase of that condo. Oftentimes I see somewhere around 10% being required for that condo to be approved for lending purposes. Also, as part of that condo questionnaire, making sure that the condo association has the proper or enough insurance to cover the place in the event that something happens. You have to remember that a bank is lending the money and they want to protect their asset as much as possible, or their investment as much as possible. And so they're going to scrutinize all of the numbers and either may approve again or deny that condo or require additional deposits for it. The condo HOAs can cause lots of problems. Another situation I ran into is where one individual was going through foreclosure in that condo association. That completely killed the deal for a client of mine, with that individual going into foreclosure. Again, it shows the stability of the overall HOA for the property, and the way that the bank is going to look at it as it's too risky. If that individual forecloses on there, it could pose risk to the entire association or to all the owners that make up this association. So we were not able to close on that property. So before you decide to purchase that condo, you want to make sure and ask the questions and get as much documentation up front. A lot of times the listing agent will have collected the condo documents ahead of time and will be willing to share it with any potential buyers before you go under contract. Also, you want to make sure that the property is on the approved list before writing that purchase agreement. You could always check with me if I'm your mortgage loan officer, because I'm going to check the county records to make sure that it is eligible for the type of financing that you intend to use. Condos can be a great option as long as you know what to look for at the front of it, and as long as you have a strong team helping you guide through the purchase of that condo. People do it all the time. You see lots of condos up and around, but hopefully this video will help you along the process. For more information, you can always reach out. Happy to help. Have a good day, guys.